If you are still struggling with trading, it's because you don't understand how the market truly operates and how price actually works. That is why in this video, I'm gonna give you my exact mechanical trading strategy that has been proven and back tested. This is the same strategy that has allowed countless of my students to get funded and bank consistent profits. So without further ado, let's dive straight into it. So what you see on the screen right now is basically how price actually move on a fundamental level. And I know it might look very complex and confusing right now, but don't worry, I'm gonna go through step by step and dissect this entire chart diagram for you. So first of all, price in an uptrend, in a bullish order flow, price will go up, right, and reach some sort of unmitigated supply zone, right, which you can find on the higher time frame, and then it will start pulling back, right? Once it start pulling back, more demand step back into the market to push price up even further, and eventually what happens next? You are just anticipating, or rather waiting for price to start pulling back again. So when price actually break above the last swing high, now creating your bullish break of structure, we can expect price to start pulling back, right? So when price does that, you know, eventually come up to some sort of unmitigated supply zone. Once again, you look towards your left, you identify any sort of point of interest, supply zone, order block, or flip zone, whatever, and then your job is to just anticipate a pullback to happen at that point of interest. So that is what it did right here. So once price start pulling back, what you can do is to narrow your focus to a certain part of price so that you don't confuse yourself, right? So you basically do that by actually marking up your strong low and also your weak high right here, which is the highest point before price starts pulling back. And I almost forgot to mention, but for this strategy, we are only going to be using 3 time frames, right? We're going to focus on 3 main time frame: our higher time frame, medium time frame, and lower time frame. The higher time frame, the daily time frame, we're going to use it to actually identify the swing structure to find out whether price is actually bullish or bearish, whether price is in the continuation phase or the pullback phase, and then also identify the swing structure like what we have done here, right? And we are also going to use it to mark up any sort of unmitigated supply or demand zones. So that's the purpose of the higher time frame, is to allow you to build a narrative and actually allow you to understand what's going on with the market right now. And then for the medium time frame, we're going to use the 4-hour or the 1-hour time frame, and this is where you can identify the internal structure, right? What is price doing within this swing range itself? And then you can also mark up any sort of medium time frame point of interest. And then lower time frame, 15-minute time frame or the 5-minute time frame, these are the time frame that we are actually going to be executing our trade on, right? So these are the time frame that you want to look for your entry models. Price is going to turn bearish for a short amount of time to facilitate the pullback of the higher time frame trend, the higher time frame order flow. So that is when price started turning bearish in the internal structure, creating a lower high, you know, lower low, lower high, lower low. Like I said, it's just facilitating the pullback. That is why price is going to turn bearish. And then eventually price pulls back, and it pulls back all the way down to where? Your demand zone that is created from the strong low, right? So this is when price actually pivoted, right, and created your last higher low. So at this last higher low, there's going to be demand, there's going to be buyers waiting for this at this area to actually push price up. So that is when price get to this demand zone, right, this higher time frame demand zone, and at this strong low, that is when we know that this pullback could potentially end soon. And that is when we know that price is going to turn bullish again, right? Shift of structure, shift of order flow, flip from supply to demand, and right now the internal structure is aligned with the external structure, the swing structure, and yeah, basically it's bullish, right? Right now internal structure is bullish, external structure or swing structure is bullish, and right now you can look for price to actually create that higher high and higher low, and most likely you can see price come up to our weak high that we have right here, and then eventually it could break above this weak high, creating your higher highs and higher low break of structure. When that actually happens, this whole cycle repeats itself, right? So this is just how price actually works on a fundamental level. I did not create this. This is just how price actually is. When you look at a chart, right, the main thing you want to ask yourself is who is in control of price, whether the supply or the demand. In this case right here, where price is actually creating that swing structure, demand is in control, right? Price is bullish, demand is in control, and price is just creating this bullish break of structure. But the minute price starts pulling back, right, like I said, it's going to turn bearish for a short amount of time to facilitate that pullback. That is when supply take control of the market. And then eventually price get to some sort of demand zone right here, and then demand step back into the market and take over control of price. and that is when price start turning bullish again to be aligned with the higher time frame order flow. So yeah, this is the question that you want to ask yourself at all times: who is in control of price? Because if you can answer that question, you can be on the right side of the market and you can actually win rather than lose your hard-earned money. And now that you have a broad overview of how price actually work, your next question is, okay Brad, cool. Now where exactly do we enter on? How do we actually trade this? Do we enter for a sell right here during the pullback, or do we enter for a buy say right here at these lows? Or do we enter for a buy here, or do we enter for a sell here? Right, where exactly can we actually trade from? That is when we move on to the next part of this lesson, which is your market phases, right? You need to understand which phase of the market is it in right now, and then deploy your trading strategy accordingly, right? This means different market phases, you must be doing different things. And this is the main thing that so many traders get it wrong, right? A lot of traders, what they do is that they try to buy at all these wick lows right here, right? They try to buy at all these wick low right here, right? Which doesn't make sense whatsoever, because price is still bearish and it's still pulling back. So if you enter for a buy right here, you are going against the internal structure, the internal range. And then some people, they try to enter for a sell right here, where price has already turned bullish, it's already aligned with the higher time frame order flow, and you're still trying to go against the trend, right? Go against the internal trend and the swing trend, which just doesn't make sense whatsoever. So yeah, now I'm just gonna explain to you how these different market phases actually work. And I mainly split it into 4 phases, right? So let's go through one by one. So firstly, we have the pro swing plus pro internal phase, right? And you can see the color of the phase, it's correlated to the color of the boxes. So you can just match the phase of the market to the color of the box, right? So first phase is the pro swing plus pro internal phase. What this means is that the swing structure, the trend, the order flow is the same as the internal structure, internal order flow, right? So this phase happens when price has finished pulling back, right? It has finished pulling back, and then right now it's continuing with the higher time frame order flow, right? So in this case, your objective is very simple. It's just to ride the higher time frame trend and order flow, right? This means you can look for buy at all these demand zones right here, demand zone, and then after you have entered for buy at these demand zones, at these higher lows, right, you can target this wick swing highs, because this is where price is most likely going to gravitate towards, and it's going to end up breaking past it and create another higher high and higher low, right? So this is one part of it. Another part of it is, if you look towards your left, after price actually create that break of structure, right, before price starts pulling back, you can also look for some buying opportunity right here during this push phase. Now during this push phase, obviously price will not just go up in a straight line like this. You'll most likely do something like this: go up, then come out to our supply zone and start pulling back. So within this push phase, with this minor correction, this minor little pullback, right, you can actually look for a buy position, right? But bear in mind, like I said, it's a very different setup if you are entering for this buy position compared to this buy position, because this is fresh, right? This is just fresh out of oven. Price has just finished pulling back, and right now price is turning bullish to facilitate the higher time frame order flow. But over here, after price created the break of structure, it's most likely going to start pulling back soon. So if you enter for a buy right here, bear in mind that you have to be fast in terms of taking profit, right? You have to get in and get out of fast, because you never ever know when price will start pulling back, when the higher time frame order flow will come up to some sort of unmitigated supply zone and start pulling back. So be careful. And like I said, last thing is this area, right? This phase of the market, this is where you are able to get the most highest probability trade setups, because these are the phases where the internal structure, right, the lower time frame trend is bullish, the medium time frame trend is bullish, the higher time frame trend, higher time frame order flow is also bullish. So you can see everything just align itself like clockwork, baby. So this is really when you can be more confident in terms of the trades that you are taking within these phases. So the next phase is the counter swing plus counter internal phase. This phase is a little bit trickier, because this is where we are going against the higher time frame order flow and the lower time frame order flow and the medium time frame order flow, right? We are going against the trend. We are going against the current of the wave in the ocean, right? But this is also where you are able to capture those high risk to reward ratio trade setups, right? You can enter for a sell here, and then you can target all the way down here at this demand zone. But the difficulty comes when you are trying to predict the top of the market, because it's very, very difficult for you to actually predict the top of the market, right? You never ever know when price will start pushing even higher before it starts pulling back, right? And sure, this higher time frame point of interest give you the extra confluence, but there's always a chance that it's going to pierce past it before it starts pulling back. So this is where you want to look for reversal setups, all right? So ideally, like I said, after price created a break of structure, we are anticipating price to start pulling back, okay? So knowing that, where's price going to pull back? It's going to pull back at some sort of unmitigated supply zone. So the minute price actually reached that unmitigated supply zone, I wouldn't actually recommend you to actually enter for a sell immediately, because like I said, price can always just pierce past it. So what you can do in this case is to wait for your market shift to happen, to wait for that shift of structure to confirm to you that price is turning bearish to facilitate that pullback, right? And you will only get that after price create that market shift, right? It gives you the extra confirmation. So I wouldn't recommend you to actually enter for a sell here immediately. Once again, you can do whatever you want, right? If you want to get that sniper entry, you can actually enter here immediately. But like I said, always wait for the extra confluence, and please don't enter immediately if you are a beginner who is not consistently profitable yet whatsoever. Now, when price create that market shift, give off that shift of structure, we have a confirmation that price has officially turned bearish. Now that price turned bearish, when price actually created this market shift, what happened? There was a demand zone right here. Price comes down to this demand zone, created a failed reaction right here. Now when it created this failed reaction, right, it created a flip zone that we have right here, right? So if this demand zone were to do its job, price were just gonna go up even higher. But no, it created a failed reaction, created a lower high right here, giving us our demand to supply flip zone. Now we got our demand to supply flip zone right there. So that is when we can move on to phase 3. Phase 3 is when you want to look for short-term selling opportunity to ride the pullback, because right now we know that price is turning bearish to facilitate the pullback, so we can actually capitalize on this fact and actually look for sell position at all these highs right here, all these lower highs being formed right here. So your job, your objective for this phase is to just play that pullback, right? Or like I said, if the higher time frame permits, this can even be a reversal, right? This can even be a reversal, and price could just go down and crash all the way down and just breaking past the strong low. If not, then price is most likely going to pull back to the demand zone that is at the strong low, where demand will step back into the market and push price up again. So within this phase, like I said, you are looking for quick trades, very, very fast trade. Get in and out fast, right? So short-term selling opportunity, you can sell here at this flip zone, and then price goes down, create another lower high or flip zone, whatever, you can look for another sell position here. And bear in mind, this is very, very important. When you actually put on your premium and discount matrix, you realize that above this 50% level, this is where price is at premium pricing. So this is where it's optimum for you to actually enter for a sell if you are trading the pullback. And then once price actually get into the discount zone, it's a whole different story, because this is when price could potentially start reversing and go up now, right? Because price is within the discount range, and this is where there's going to be some sort of demand, right? So bear in mind that it's a very different story to actually sell here compared to selling, say, right here, right? Because right here, price has already created a market shift, price has already turned bullish, the internal structure is already bullish, so it doesn't make sense for you to actually enter for a sell right here, where the internal structure and the swing structure is both bullish, right? So bear in mind, when it comes to this, be careful, okay? Look for short-term selling opportunity. Like I said, short-term, keyword here is short-term. If you want to enter for a sell here, take profit at this low right here, enter for a sell here, take profit at this low, right? In and out. And then last but not least, my favorite phase to trade is the pro swing plus counter internal phase. This is where you are able to get those high risk to reward ratio trades, and it's actually high probability compared to this one, which is low probability, right? Because this is when you got that swing structure, which is bullish, the internal structure is bearish, but then it is shifting to bullish. So this is basically the start of this continuation phase. So if you're able to get in right here for a buy, guess what? You can capitalize on such a huge move right here, because price is most likely going to go up to the weak high that we have right here. So this is where you are anticipating the end of the swing pullback, right? So this is price pulling back, okay? Price is pulling back, and it's going to pull back to where? Like I said, some sort of demand zone at the last strong low, right? So the minute price actually get here to this zone, this is when you can actually look for that reversal, right? Your reversal setups. And how you do that is to wait for, once again, your market shift to give you a confirmation. There's a shift of structure. This pullback is done. The bears are out. Demand has officially stepped back into the market and take control. And then price is going to turn bullish. And then I'll personally enter after that market shift happens, get some sort of liquidity sweep. And then I just wait for price to get to my point of interest being created right here, either a flip zone or an order block or an extreme point of interest. Bam, get my entry, and I trade it all the way up here, right? And yeah, this is basically how you actually trade the markets. So just to show you this strategy actually works, I'm actually up like 5k using this strategy, right? This is just proof that I'm not just sitting over here and just yapping to you guys about a strategy that haven't been proven whatsoever. Like I said, this actually works, right? And yeah, you can pretty much see that this is actually the trade that I actually entered on using this mechanical trading strategy. And right now, this is the result, right? Making about 5k right now. So I'm just gonna explain the thought process about this trade and how to actually apply this market phases thing towards that trade, right? And like I said, knowledge is absolutely useless if you don't apply it into the market. So let's look at the market and let's try to apply the different market phases. So first of all, right, the first phase is right here. After price created a break of structure, you know, price is bullish, and this is when you can look for, like I said, your short-term buying opportunity, because you know price is gonna start pulling back soon, and you don't want to get caught in the pullback. So you can actually enter for a buy here, right? There's a demand zone being formed right here. You can easily enter for a buy here or another buy at this area here. But the minute price actually get up to that unmitigated supply zone, you shouldn't be looking for buy whatsoever. So if you enter for a buy right here, guess what? Your take profit will be at this supply zone, right? Very in and out fast. And then also here as well, right, which I'm going to discuss later. And then next, price actually get up to that supply zone. If you look towards your left, right, what do we have here? Supply zone, right? Supply zone. This is where smart money have entered in the past, right? There's a lot of supply step into the market and push price down. So yeah, this is where phase 2 actually happened, right? Supply step back into the market, take control, and price started turning bearish to once again facilitate that swing structural pullback, right? So over here, we got that market shift happen right here after price actually broke through this last low right here, right? Market shift, right? And then over here, there's a little bit of fake reaction before price goes down even lower, creating your lower high and lower low, right? Lower high, lower low. And then in this case, you can actually drop your medium time frame supply zone right here. So if you want to enter for a sell right here, that will be phase 3, right, where you are trading counter swing and pro internal, and this is when you can easily look for some selling opportunity right here. And bear in mind, if you want to enter for a sell here, I will actually recommend you to take quick targets once again, and where you should be targeting is at this swing low right here, right? So this last swing low, right here or here. Or if you want to swing for the fences, right, what you can even do is to just target this strong low that we have right here, right? This would be a very good setup as well, but it won't be the most highest probability, because if you look towards your left, what do we have right here? There is a demand zone right here. So there's always a chance that price will get down to this demand zone, right? Get down to this demand zone, and price will just continue and going up like this, right? So that is why I will ask you, if you are looking for short-term selling opportunity right here, right, you're trading phase 3, be conservative with your take profit and just take profit at the next low, right? And eventually price comes down, right, come back down to our strong low that we have right here. And what do we have? If you look towards your left, this is your order block or demand zone, right? You can see this is actually an order block. If you want to refine it to this candle right here, that would be your order block. And then over here, we got a little bit of liquidity being swept as well, right? Where there's liquidity being built up below these lows, price swept the available liquidity, and bam, that is where demand step back into the market and push price up. So this is a very strong demand zone. This is a very valid point of interest. So we can definitely depend on it, because there was imbalance, there was lots of demand, lots of buying momentum, and price has also swept available liquidity at this strong low, right? So this is when we can look for your phase 4 trades, right? This is where you can anticipate that this pullback could potentially end, and right now price is about to turn bullish to be aligned with my higher time frame order flow, which is bullish, so I can actually enter for a buy somewhere right around here. And then this is where I will be targeting where my weak swing high, right, which is all the way up here, right? So yeah, that is basically how you actually do it. And then later on, price goes up, creating that. What do we have right here? This is actually your market shift, right? This is the last lower high, and over here we got that market shift happen. Just get rid of this. Got a market shift happen right here, and after market shift, price pull back. And then if you notice, what do we have here as well? There's a supply zone right here. Okay, supply zone, and then it created a failed reaction right here. So there's actually a flip zone right here, right? So there's actually a flip zone right here. This is where you can actually look for your entry, right? So first of all, after price created a market shift and price starts pulling back, this could be your first point of entry, right? Somewhere around here, you probably get the lower time frame market shift. You could have entered right here. If not, your second point of entry would have been somewhere right around here, right? Started pulling back to some sort of little demand zone that we have right here, and this could be your second point of entry. And if you miss this setup and this setup, guess what? You're waiting for price to pull back. And where is it going to pull back? It's going to pull back to this flip zone that haven't been mitigated yet, right? And that is when price come down to this flip zone. This could have been your third point of entry, right? And yeah, that's basically how the different market phases work. And just to quickly explain the trade that I'm in right now, I actually entered during phase 4 and phase 1, right? So this was my first setup. So immediately after price actually created that market shift on the lower time frame, bear in mind this was on like the 1 minute time frame, right? And then price come down to my swing low, right? My valid point of interest, that swept liquidity, my strong order block, right? So price comes down here. That is when I waited for the market shift, waited for liquidity to be swept, right? Got all my confluence, then I enter for my first trade right here, right? So I was actually looking for my second opportunity, but I didn't get any because price was just going up and there was no valid point of interest being created until price actually come up to this supply zone, created a failed reaction like I mentioned just now, creating a flip zone, and bam, I'm just waiting for price to come back down to this flip zone, right? And then eventually price keep on going up, and then right now price has officially pulled back, tapped into that flip zone. That is where I look for my second position, right? So this is where I actually entered for my second trade. So that is why if you look at the MetaTrader 4, I have 2 trades in place running to my overall take profit, which is all the way up here at this little order block right here, right? So yeah, that's basically how I actually trade. Now bear in mind that whatever I just explained to you, this is obviously not the complete mechanical trading plan that our students have, because I can't be giving away everything, right? I will give you as much as I can, but we need to keep some for the students, right? Keep some sauce for the students, right? So if you are interested in the complete mechanical trading plan that has allowed Alia to actually make 25k, Sambodin to make 10k, and countless of our students to pass funding challenges and actually bank consistent profits, go and click the first link in the description. And from the bottom of my heart, I genuinely hope that this video has allowed you to gain extreme clarity and confidence when you are trading the financial markets. So if you want to learn more about this strategy, you can check out this video right here. And as always, remember, you're just one trade away. Mwah! Like this video if you have enjoyed it, buddy.